Partners of Commercial Fishermen. We are back with another episode, and I'm so thrilled to have you here. Fishermen, family, friends, supporters of the industry. Welcome to another episode of the Partners of Commercial Fishermen podcast. I'm your host, Megan Waldrop. And if you're new here, welcome. We're so thrilled to have you. We come together each week to celebrate the unique lifestyle, the all-encompassing, surprising, all the feels lifestyle that is commercial fishing. And part of that is, how do we manage, I feel like number one, how do we manage our anxiety? I feel like the mental health thing, let's not forget that. Number one, how do we manage our mental health, whether we are on the ocean or we are at home? These are important facts. And we have so many resources on the POCFpride.com blog and amazing resources in different episodes of this podcast. Another huge thing that we talk about for, obvious reasons I would like to say is financial management. Like, how do we make sure that we feel, this goes back to the mental health piece, less stressed about our finances, right? Like, we always want to figure out how we're going to do it different. And, personal story, I feel like, Chris and I are very analog with our receipts. Yes, we go through receipts. We don't have QuickBooks. We don't have any kind of fancy financial software to help us go through, but we make it through. Okay. So each year I'm like, it's going to be different. We're going to organize it. And each year I feel like we do tweak it enough. We do make it a little bit easier. But today's interview with Chris Capone of Chris Capone and Associates, he is a CPA. He has a firm in Wilmington, North Carolina, with a bunch of other amazing CPAs. They do all kinds of cool stuff. But this interview is so helpful. We dive in. And I want to say, I straight up dive in with all the questions. I would wait to the end just to hear how he got into the business too, just to get to know Chris too, because it's so nice to get to know him better. And I feel like I was so excited to learn how we can all get our finances fancy and organized that I forgot to say, yeah, Chris, so how did you even get into this business? So this is my shout out to Chris. Thanks for bearing with me. Such a great guest. But please listen to the end and to get to know him better, because he's just such a genuine guy. And you can hear it from his first answer. He's just super chill and cool. And honestly, the vibe you want when it comes around organizing and dealing with money, because I know for many of us, money can feel really stressful, and maybe we feel that it is, validating or invalidating our self-worth in a way, which is, by the way, completely not true. Money is just a number. It does not define us, okay? It is meant to flow. It is currency, current. That is the word for current. We know what current means. It flows. It's just like water. It comes in, it goes out. And to get that kind of awareness around it is helpful mentally. And then to get into the alpha state of, all right, let's put these numbers together and get them all organized. That's a whole other bonus to it. So like I said, today we're chatting with Chris Capone, who is the founder and CEO of Capone and Associates. His firm specializes in bookkeeping, financial planning, CFO services, forensic accounting, exit strategies, and more. And in this episode, we discuss the most common bookkeeping mistakes and how to avoid them, great practices for POCFs and bookkeepers, which, by the way, POCFs are a lot of the time the bookkeeper, great practices for vessel owners, deckhands, and small business owners to stay organized without being overwhelmed, how the fishing businesses can avoid common payroll tax pitfalls, the optimum time to contact your accountant, and his ultimate investment advice, and so much more. I hope you guys enjoyed this episode. I feel like I was taking notes the whole time, which I honestly 100% was. And I'm going to have Chris come back on the podcast, as he so generously offered his time, because he is going to share even more tips about finding the right CPA, what questions to ask. We're going to get into that later on this year, but I hope that you enjoy this episode with CPA Chris Capone. And yeah, if you like this, please tag me in Instagram. You can screenshot, tag me in your DMs. I'll repost it. I always love to know what episodes hit home for you. So, all right, let's get our money tight. We got this. We got this together, y'all. I hope y'all enjoy. I'm Megan Waldrop, host of the Partners of Commercial Fishermen podcast, an extension of an online community for partners to connect and feel less alone. Our podcast invites fishermen, family, friends, and supporters of the industry to learn, laugh, vent, and hear stories about this incredibly unique way of life. What do you say? Let's dive in. All right, Chris Capone, I'm so glad you're here to be our fairy godfather of how to keep our financial shiz together. It
Like,
is so nice to have an expert here just to give us a 101. So I feel like this is kind of like a not only like a debrief, but a introduction slash like a heavy course, just like getting in there to get it. So thank you so much for being here.
yeah, my pleasure. I love your organization. I love what you're doing. And one of the biggest parts of our business is actually working in the marine industry with boat dealerships and brokerages. And so I'm very, very close to the marine lifestyle, so to speak. So
That's amazing. That's such an asset because I feel that in the commercial fishing industry and families and especially partners, it's hard to find people that speak our language. It's really hard for people to understand the maritime lifestyle because it is so different and we operate on different times. We operate on different weather patterns. The moon, I mean, we are connected in a different frequency. So it's awesome. So thanks so much. And I'm going to dive in. And I'm
cool.
like, let's just get into it. All right.
Yeah, let's do it.
What are the most common bookkeeping mistakes small business owners make?
I think the biggest mistake is just not doing anything. I mean, you would be surprised how many and I guess it's a normal thing. It's where, hey, I've got a business to run, I've got an idea, and that always becomes more important than the bookkeeping sometimes. And then you get to the end of the year when you got to file tax returns, and it's like, oh my gosh, like where do I even start? And so I think that, the biggest pitfall is to not do it, or really to try and trying to do it yourself is sometimes not the best, idea as well. And um the sooner that you could bring in some type of, an expert or a partner or someone to at least give you some guidance, the better, because it's going to benefit you in the long run for a couple of reasons. One is because you want to be able to know how much money, you're making, a revenue minus expenses, like how much profit am I actually generating? But also, if you're not doing a good job of keeping your books, you might be missing out on a lot of tax deductions that can save you money down the road. So, yeah, just re-summarize: not doing it or trying to do it yourself and not doing a good job, I think, is probably some of the biggest pitfalls that we see. So,
Yeah, absolutely. And I know there's a lot of partners out there going, well, I am the bookkeeper of our business. And we just got started on this, which is great because we're going to have all these amazing tips that are coming up to help people who are actually doing that. But when you say
yep.
get people like expert advice, you're talking about an accountant, you're talking about a bookkeeper, or who else are you talking about should be on that financial team?
Yeah, I think, strictly looking at it from just like a bookkeeping and, tax perspective, get a bookkeeper. And if you are, and also I want to say, I understand that a lot of people that are running their businesses, like, you might not have the resources or the additional income to hire a bookkeeper, and that's fine. But I know that there's services out there where you could do at least some type of, like, hey, can you just like look at this on like a monthly or quarterly basis and just like, point out where I need to focus or what I can do. Also, there's so many good like YouTube videos and resources out there that you can find. So sorry, I rambled there.
Yeah.
If you
No, that
could
was
kind of
great. No,
restate.
no, that was perfect because that's what we want to hear and know is, and also I have a really basic question.
Hmm.
What is bookkeeping? Is it
Yeah.
literally what it sounds like? But like, what is bookkeeping and how is
Yeah.
that different from accounting?
Yeah. So I think, it's somewhat interchangeable. Bookkeeping is making sure that the money that comes in and the money that goes out gets recorded in the financial statements in the right place. So money coming in doesn't always mean revenue, right? Money going out doesn't always mean it's an expense. Um, and so that gets us a little, and maybe we'll talk about this later, P&L and a balance sheet, but bookkeeping is making sure that every dollar and cent is accounted for in our financial statements, and then also making sure that we reconcile the bank statement at at the end of each month is a best practice, so that we know that, hey, everything that came in and out in my accounting system actually came in and out of the business bank account as well. So
That's great. Okay. And I appreciate you saying that before about how, people wanting to look at their numbers or not wanting to look at their numbers, because it feels like it's the last thing you want to do. It's also could be very intimidating and scary, and probably the most unsexy part of the business comparatively to, the adventure of being on the seas or whatever kind of business that you have. And I've actually reading this book called Money, or it's called Money, a Love Story by a woman named Kate Northrup. And it's all about getting more familiar with your finances, and also realizing that, you're not defined by whatever is in your bank account. Like, your worth is greater than that as a human being. So let's just put that as number one. Number two, it's just a number. We can't let that define us too. It's just a number and something we can work with. And it's interesting to read this book and get more familiar with just finances, of saying, well, am I going to look at my bank statement every day, every week? Like, how do I make this more of an integral part of my life, and not this, this conversation I don't look forward to having with my spouse? Because for a while, Chris and I, we'd be like, oh my God, here we go. Let's talk about it. And it's like, it would just be like this knot in our stomach. We'd feel better after we talked about it. It's like, but now we've gotten in a routine of being able to do it every week. And it feels a lot better now that we've exercised it. It feels way less scary. So I'm just sharing that in case other people are feeling that way. It's like, it's all doable. And it actually, what comes out of it is you realize that you have more power within that knowledge, and that you actually can handle your finances more than you thought you could, because you actually know what's going on. So anybody having fear out there, this is your sign that you can get, more familiar and get that power for sure. Okay. Speaking of, let's keep going. That was question number one. I love that we're already here. Okay. What's the best way to separate business and personal finances?
Yeah, that's a great question. And it's really hard to do. I mean, especially when it's like a lot, it's part of your lifestyle and you're just starting up. The best thing you can do is get a business bank account and get a business credit card, and have a personal bank account and a personal credit card, and just do your best to use the business stuff for the business and the personal stuff for the personal. And that's definitely the best, easiest way to do it.
Yeah, because then you can just go to that account and all those expenses, boom, you don't have to think twice. Like, did I use that for the home? Or that's great. Okay,
Right.
that's simple enough. We got this, people. We got this. So what key financial reports should every business owner review regularly?
Yep. So you should be looking at your profit and loss, which is your income statement, on a monthly basis. And you should be looking at, I mean, depending on, the level and scale of your business, that you've got to look at, right? Every month. The balance sheet is something that you should also look at each month. But again, it depends on how complicated your business is, how much, just how much you've got going on. So, and I could talk a little bit more about, what each of those means, and like the difference between those statements,
Yeah,
as well.
absolutely. And this kind of goes with that last question. So how often should a business reconcile bank statements, and why is it important?
Yeah, every month,
Yeah.
reconcile your bank and your credit card statements, because what that does is it makes it and ensures that everything that did go in and out of your bank account has been recorded in your financial statements.
Got it. And so then, yeah, you're not at the end of the year, it's going, I have a mountain to climb of trying to dig through all these numbers.
Exactly.
And that's interesting, because I know in fishing, my husband's been a captain, and what he shows on paper and what he takes home is completely different, because the fishing business is so expensive to run. It's like, we need to make sure that there is money in the business account for this, and then this goes to the home account. And it's interesting to say, oh, wow, look how much our combined income is at the end of the year. And then it's like, well, actually, how much of that income are we actually using for our home? And how much of this is actually going back to fishing? And I appreciate that, just having a routine of looking at it every month. And also, I wanted to add, in the book that I'm reading, The Money, A Love Story, she talks about setting a date for yourself when you're looking at your finances. So lighting a candle, pouring a sparkling beverage, maybe putting on lipstick and dressing up, like actually celebrating the moment so it feels more like it's
I love
a
it.
fun activity rather than, oh God, here we go, like stressed out, So if that's
That's
helpful, I had to share that one too.
that's great.
Okay. And I know you're hitting on this whole interview, but here's another question about specifically for commercial fishing. What are the best bookkeeping practices for seasonal businesses like commercial fishing?
Yep. So when you mean like practices, are you saying like processes or systems or all the above?
All the above.
Okay. Yeah, I think, and again, this probably might answer some of the other questions, but get some software to help you do your books, whether it's QuickBooks, you got to pay a little bit for that. There's some other ones out there that there's some I think that are free. For example, there's one called FreshBooks,
Hmm.
and I think that actually is a free accounting software. And like if it's not free, it's almost free. And what you can do is you can connect your bank account and your credit card to the software. So every time you swipe your credit card, every time money goes in and out of your bank account, it automatically goes into the software. And then from there, you can classify it to the right account.
Wow.
So that is like, regardless of whether your business is seasonal or not, like that's like fundamental, like, that's like a really good thing, especially if you're doing the books yourself. And the seasonal book, the seasonal accounting and bookkeeping. I mean, it's just, that there's going to be certain times of the year when you're going to be, I would assume that when you're the most busy, you're also going to have the most amount of accounting that you're going to have to do after that, because that's when like all these, the majority of the transactions, you're going to have to do. So I guess is, how can you plan? How can you know, be proactive to say, hey, I'm going to take care of this task now so that when I am super busy, I can focus on running the business and, cleaning up a little bit maybe afterwards.
Yeah, absolutely. Thank you for those reresources. I'm going to add those to the show notes for sure. I've never heard of FreshBooks. That sounds great. So is
Yeah.
QuickBooks like that? Oh, go ahead.
Yeah. No, sorry. I shouldn't have.
No, you're good. This is an interactive conversation, so I
Yeah.
appreciate it. It's awesome.
Yeah.
Is QuickBooks the same way that you swipe your card and it connects to QuickBooks and everything is documented?
Yes.
Wow. Okay. I know a lot of
Yeah,
people are.
you have to go through a process of connecting the bank
Mhm.
account and the credit card, and there's tons of resources on YouTube and even QuickBooks Online.
Yeah.
And I'm not like sponsored by them or plugging
Yeah.
them. It's just one of the softwares that 90% of the businesses we work with use, and it's just a really good software. So
Yeah. No, I'm like, let's get the sponsorship of QuickBooks.
yeah, I know.
Let's
As I'm
do that.
saying this, I'm
Hello.
like, dang, like where's my where's my sponsorship
Heck
on?
yeah. All right, let's work on this. That sounds
Yeah.
great. And also, even though I'm going to ask questions that might be something you said before, I think it's okay to repeat because it just
Yeah.
shows the importance of it. And also, it's helpful for me because I feel like I have these separate questions, even though they pertain to certain answers. It's like, oh, okay, it goes back to this one. It goes back to this. These are the core essential knowledge pieces that we need to move forward to keep our finances fancy. So
Yes.
here we go. How can commercial fishermen and their partners prepare for tax season throughout the year?
Yep. So the best way to be prepared for tax season is to keep up to date financial records and do your bookkeeping throughout the year.
Yeah.
Categorize your transactions, reconcile your bank statements, and just have that information ready. Because that's the hardest part of if you have all of your information categorized and accounted for, then doing a tax return is actually really easy. I shouldn't say easy. It makes it a lot easier. And if you're doing the tax returns by yourself, again, with QuickBooks and Intuit, like there's software that takes your financials and automatically will like generate your tax returns for you. So if you're doing that throughout the year, then it becomes, a much simpler process. But also, and again, depending on the complexity, depending on how much you have going on in your business, if you're able to sit down with your CPA in September, that's like a best practice. Hey, here's the amount of revenue, like here's our income for the year through September, and here's kind of what we expect to generate in income of the next 3 months. This is how much we think we're going to make for the year. Like, oh my gosh, we're making too much money. Like, is this the time where we should buy, purchase some equipment, invest in an upfit so that it'll reduce your tax liability, as opposed to, so it also gives you the opportunity to be a little bit more strategic about your planning.
That's a great idea. I love the idea of touching base in September and not like scrambling, be like, do you have enough time to fit me in January or February or
Yeah,
March or April?
because then it's
Yeah.
too late, and then there's nothing worse than it's March 15th, and it's like, yeah, you owe $50,000 in taxes. It's like, whoa, like how did that happen? And if we had looked at this 6 months ago, I needed to purchase a new piece of equipment, and we could have depreciated that 100%, and my tax bill would have been $10,000. I don't know, like as an
Yeah.
example.
No,
So
that's a great idea. I know a lot of partners also recommend to each other that, when the seasonal income, because it is so different, it fluctuates every year, is that, you plan for your leanest year. And then
yep,
when you have that income, you can buy those bigger purchases. So I have a wish list of things that I'm like, oh, this would be nice to have if we wanted to remodel the bathroom, buy a new car, get a new washer and dryer, whatever it is, or kids, school or whatever it is. It's like, then you could put your money there and yeah, get hopefully a deduction on your taxes that way. That's
yep.
so helpful. Okay, this is great. Um,
Also, hey, another thing, like from tax planning perspective, I'm talking about, family businesses. If you've got children, you can put them on the payroll and I think it's up to $6,000 a year. It's like tax-free, it's basically tax-free income that your kids don't have to pay taxes on the first 6,000. So, there's more to that, and being, up to date with your financials and having somebody to talk to, like those are some of the things that you could take advantage of.
Amazing. Thank you for that tip. That's huge. Yeah. Wow. Keeping the money in the family, also giving
Yeah,
your kids a cushion. Maybe that's with school or whatever they want to do in the future. That's such a great
right.
idea. I love that. Yes. Thank you for adding that one in there.
Definitely.
Okay. So how can business owners create a simple cash flow management system?
Yeah. Yeah. Cash. I mean, that's like the ultimate tool to be able to use to like see how your business is doing, right? In most small businesses, you're going to be doing your P&L on a cash basis. So your P&L is going to be very, very close, if not the same, to what your cash flow statement would be, right? Money comes in, money goes out. As you have like, mortgages and debt, that changes the P&L cash flow thing. But the best way to do a cash flow thing is to keep it simple and don't try to be perfect, and just be disciplined to look at it on a weekly or monthly basis, right? Because it's just something that's going to be consistently changing, and you just have to be disciplined. So I think, I've put some very simple templates together, but it's basically like, what are my, three revenue streams, right? Or whatever it is. Like how does money come in? What are my, 4 to 6, expenses? It's fuel, it's some equipment purchases, it's, insurance, it's um, f- you know, other supplies and stuff, and just like getting a spreadsheet or even a napkin or a piece of paper and just write those down. And then you've got each month broken out, or each week, however you want to do it. And you just have to say, okay, I think we're going to get $1,000 this week. And I know next week I need to fill up the tanks. I need to buy some equipment, and it's going to be $700 and $300. And then you're able to see it's like, okay, well, I'm bringing in 1,000, but I need to spend 1,300. How much money do I have in the account? And then just kind of, consistently, managing that.
Great. I love it. Okay. What's the best way to budget for unpredictable income in industries like
Ooh,
commercial fishing?
yeah. I mean, it's unless you've got a crystal ball, I mean, it's kind of hard. But I think like you actually made a good point is to be maybe a little bit conservative in your budgets and say, hey, what's like the worst case scenario, and then maybe having with a lot of businesses we work with, we'll do a couple different scenarios. It's like, hey, scenario A, this is like dire lean year, like bare bones. Scenario B is, hey, it's a little bit better, and scenario C is like, hey, we're gonna kill it. And just having a couple different data points. But especially in the commercial fishing business, I mean, there's just so many variables that are outside of the owner's control. Like you don't know how much you're going to come back with. And so I mean, it's really hard. And I think that taking a conservative approach is probably the safest way to do it.
Yeah. And on that note, how much should business owners set aside for emergencies? So I've heard on Dave Ramsey, he says
Yeah.
to set, I think, 3 to 6 months. I don't know if he even says 12 months of living expenses aside, and that's for the home. So is that the same or different for a business? What would you recommend in that situation?
Yeah, 3 to 6 months is a great rule of thumb. In most businesses, that's not practical. Like I mean, it's out. We work with lots of businesses, and not a lot of businesses are able to do that. So I mean, that really is like if you've got 6 months worth of living expenses set aside, and you've got 6 months of operating expenses for your business set aside, you're doing really good. And so I think 3 months is still pretty darn good. But yeah, that's a very good rule of thumb.
Okay, great. Here's a
Yep.
juicy one.
Okay.
What strategies can help balance paying off debt while investing in business growth?
Yep. Yep. Um, that it's a balancing act, right? I would say that depending on the site, your life cycle in the business, and also maybe not even just like, the long-term life cycle, whether it's startup, you guys are just starting up, or it's a mature business, or, we're kind of ramping down. Also, you got to take seasonality into that as well, right? So, um, you know, even let's say, in the down season, you've got a bunch of cash in the bank account. You might be tempted to be like, hey, I'm going to pay this loan off because I don't like having debt, right? But debt is not a bad thing, right? It's actually like, a good thing to have to help you grow your business and help you get a little cushion. That 3 to 6 months, cash reserve type deal. So let's take the seasonality aspect is let's think about, hey, I have cash in the bank, I've got debt, but I don't know how this, are we going to have a really good season? Are we going to have a bad season? So I would say that as long always make sure that, you always want to make sure that you're making your payments and are current on all your debt. But, if you're tempted to pay down debt just for the sake of it, um, if you're in that situation, you've probably been doing fairly decent, and you should probably go and talk with someone. You've probably got some resources to, pay for a consultation to talk with an advisor or a fractional CFO or something like that. Um, then, and then again, like, taking on debt which is going to help you increase revenue is always a good idea, or not always a good idea. That's the best type of debt. It's like, hey, I've got to take on this debt, but it's going to help me generate revenue. That should be like the number one priority of investment and debt that you want to take on. If you're taking on debt to buy a luxury item that you really don't need, that's probably not the best use of investing and taking on debt.
Yeah,
So.
that's a great point. I feel like I'm getting over the word debt, and because I definitely was not responsible with money in my 20s and paid off a credit card, and I was like, never again. But now I'm thinking, oh yeah, debt. let's find another word for that. If it's investing
Yeah,
in yourself, you know, if
it
it's
is.
investing in the business and it's going to help you grow, you got to get to a next point somehow. And also to know that, give yourself grace enough that you have enough wisdom and willpower and, you know, actual knowledge this time to move forward in a way that's going to be helpful and not just like I did, buying rounds of drinks from my friends in college. You know what I mean?
We've all
Like,
done it.
oh
We've all done
God,
it.
so painful to even, I forgive myself, but that was for years. I'm like, that was anyway,
Well,
amongst other things.
and I think a lot of people, a lot of people might not understand. It's like, hey, I need to save up $20,000 in cash so that I could buy this new piece of equipment. But really, you know, if you're able to put 20% down and take out a loan to cover other 80%, that's going to expedite your timing to be able to grow your business or generate more revenue. So, and there's so many avenues out there to get debt. And, you know, typically if you're going to buy a big piece of equipment, typically they've got resources, where they'll, help you get the financing.
Yes. Okay. This is a question that I wanted to ask you about all the intricacies of this. So I'm looking at wanting to set up an appointment with a financial planner and a financial investor. However, I'm not really sure I know the difference between either. Could you please explain the difference between a financial planner and a financial investor?
Yeah. So it, you know, I've met people, so you could have three people call themselves financial planners and they could all have different service offerings,
Got it.
right? Um, you know, some financial planners will also have an arm of their business where they will take your money and invest it for you, right? Some financial planners or advisors will strictly just be an advisor and say, hey, here's where you are, here's where your goals are, here's what I think you should do. And then, by the way, I've got some other partners that do, investing and stuff like that. So it's a very broad term, and different financial planners will have different products and different offerings.
Okay, that's
So,
helpful. I also read that it's important to make sure that the person that you want to work with has either is maybe owns their own business and they're not working on commission to make these investments for you. So you know you're getting straight advice and not someone trying to, cushion their bank account for
yeah,
your needs.
exactly.
Okay, so throwing that out there.
Yeah,
Thanks
those
for
are
that.
great. Those are great questions to ask your financial planner and advisors. I mean, is how do how do you get paid? That's a fair question. And if they're solely getting paid on commission, your interest might not be aligned.
Yeah,
Right.
that's great to know. Absolutely. Okay. Switching gears to payroll.
Yep.
What's the best payroll system for small businesses? And I want to pause saying that my husband, a captain, has one deckhand. So it's like write a check. That's how he's done payroll. I know other
Yep.
people who have systems because they have bigger crews, maybe multiple vessels. The list goes on. But generally speaking, I would say under 100 employees. Like we're not talking about huge processors here, but for small businesses, fishing, individual small fishing businesses, what is the best payroll system?
Yeah. So before I answer that, so I want to differentiate between a 1099 or an independent
Yes.
contractor and a true employee, a W-2 employee. And a lot of people will use employee, but hey, this guy's really an independent contractor. He's kind of works on his own free will. I pay him based on hours and whatever. So if you're like in your example, it's just I've got one person, I write him a check, he's an independent contractor. You don't need to have a payroll system for that, right? Like writing a check is perfect. Now, you do want to make sure that you've got an accounting system, because if it is an independent contractor, you need to send them, their 1099 each year, right?
Yep.
Um, Now, if you are talking, now if we really do have W-2 employees, I mean, there are a ton of payroll services out there. And, I haven't really come across any that are bad. any like bad ones. The more complex your business gets, the more complexity the payroll might be, like if you're dealing with multi-state or, stuff like that. But, again, QuickBooks has integrated payroll, so if you're using QuickBooks, their payroll function, again, like where's my sponsorship money for this? That's a good one. Gusto is one that we've worked with a lot. I mean, there are just so many options out there. And I think that payroll, if you have W-2 employees, that is not something that you want to try to do on your own. Get a system that's going to handle all the compliance, because getting behind on payroll taxes is is a really, really bad thing. And, I've seen business people go out of business because it's like, hey, I didn't know I needed to pay this. And then they hit you with like ridiculous penalties and fees. And it's like, I literally can't afford to pay this. So I would say that any system is a good system, so long as you have a system that's doing it, taking those taxes out, making the payments, and filing the quarterlies and the annual reports that need to be filed.
Great. That just answered my two other questions, which was how can businesses avoid common payroll tax pitfalls? And then also, what should business owners know about keeping records for crew members and employees? So that kind of sums it all up. That's great.
Yep.
Okay. How do bookkeeping needs change when hiring employees? I guess you just said this, by hiring employees and independent contractors. We kind of wrap that one up too.
Yeah. I mean, making sure that you've got the payroll system, and then the independent contractor thing is, when we're paying people, we need to track that so that at the end of the year, when we send out the 1099, we know exactly how much to send it out. And again, doing that regularly throughout the year is going to make the year end in your life so much easier.
Okay. Now here's a question for those that are analog, like Chris and I. So we don't have QuickBooks. We don't have FreshBooks. People are probably like clutching their pearls right now, but that's just how it is for us. And we have piles of receipts, and I was telling you earlier, I just flew to California. It's the end of spiny lobster season out here. And part of my duty while I'm out here is to help get our taxes in order. Part of that is going through the boxes of receipts that he has.
Yeah.
And so wondering, what's the best way to organize receipts and track expenses? This said digitally, but I want to know, is this like finding my chi and then just like getting after it of these receipts? Like, is there a certain way other than just harnessing and getting after it?
Yeah. I think again, it comes and I guess I also want to say, it's like, if you don't have like a FreshBooks or a QuickBooks, like don't stress. Like it's not a big deal. There's so many other ways that you can do it. And I think that just organization is always going to be your friend. So like, if you guys are using receipts, like maybe I've seen people that use like Ziploc bags, right? So it's like, oh, I have 5 Ziploc bags. One is for fuel receipts. The other one is meals and entertainment or whatever, the other one is supplies. And the other one is, I don't know, whatever it could be. And then when you get to the end of the year, it's like, hey, at least I have some sort of organization. So what I'm going to do is I'm going to get my calculator out, and just go through and add everything up.
I love that. That's actually super helpful, because now I'm going to separate everything by those categories and then add it up. Because in my head, I'm like, I guess I just need to start adding everything. And I'm like, no, that's actually going to I'll be doing more work because I'll have to go back anyway.
Yeah.
Okay. Yeah.
Or even like, I think and live in Excel spreadsheets. And again, this might be not fully analog, but hey, I mean, even if you just have a spreadsheet and like that's another way to kind of document everything, and having a separate tab in each Excel book for different categories and stuff like that.
Yeah, great point, because we actually do have spreadsheet. I love Google Sheets. I don't have Excel. I'm on my Mac, so I always use Google.
Yeah, exactly.
It's so great. I have a Google spreadsheet that actually is for how to keep our finances organized for Partners of Commercial Fishermen. I have sent the link before, but I'll put that in the show notes too. That's right. I totally forgot that I have that resource. Here we go. Thank you so much for that. Okay.
Definitely.
So, and I guess you just asked, or we just talked about this too, but recommending setting up a bookkeeping system from scratch. It starts with a non-sponsored Ziploc ad like we're doing right now. Like Ziploc sponsor us, but keeping everything separate if you're not doing a digital program, correct? And then
Yeah.
just going from there. I love it.
Yeah.
Okay. So what are the biggest red flags that a business's books might be in trouble?
Yep. And we talk to, people that have very large businesses, and they will say, I really don't know how much money I made last month or last year, because, and what that means is that they just don't have accurate and up-to-date financial statements. So I think that, red flag, the red flag is if I were to ask you, hey, how much how much money did you guys bring in last month? How much money did you spend last month? And if you can answer that question, you're way ahead of the game and you're doing great. And again, and if you can't, like, don't stress. But I think that the basic questions of, hey, do I know how much money I'm making? Like, I know how much money I have in my bank account, but that money that's in the bank account, like, is that really all my profit and my money? Or, do I have some liabilities and invoices that I need to pay that I've just been, kicking down the road? So I think it's like, if you can answer the question of how much money did I make over a period of time, you're doing pretty good. And if you're like, I don't really know how much money we brought in or how much money we spent over a period of time, I think that's probably a red flag to, hey, let's, see how we can tighten it up a little bit.
Yeah, I love it. And also, everything is figure outable, everyone. If you're
Of
stressing out
course.
listening to this, like,
Yeah.
don't worry about it. You good. This is how we get it. This is how we
Yep.
learn.
Yep.
This has been so insightful. I feel like I'm going to have more questions in the future, but I feel like we really nailed down the 101 bookkeeping, just how to get organized, how to not feel stressed about it. And then the QuickBooks and the FreshBooks resources, such a great ad. And
Yep.
I'm going to add those in the show notes, like I mentioned. And is there anything that you'd like people to know that we didn't touch on about you, your business, or any topic that we
Yeah.
covered today?
Well, thank you. Yeah, no, I'm really nothing about me or the business. If there's people that are listening that, have some specific questions, like, I'd feel free to reach out, and we'd be happy to share some insights or resources. So maybe you could put my contact info in the show
Absolutely.
notes.
Yeah, I will.
Um,
Yeah, Chris Capone is the founder and CEO of it's Capone and Associates. And so
yep.
his website, I'll put it in the show notes, is www.caponeandassociates.biz, B-I-Z.
Yep.
Actually, I have a question for you. How did you
Mhm.
get involved into the world of finance and money and accounting and bookkeeping? What's your story, Chris?
Well, I always wanted to be an entrepreneur, and I never had any good ideas. And then I went to college, and I was like, Dad, what should I study? And he said, well, accounting and finance is the language of business, so you should study accounting. And I just said yes, and like declared my accounting major, like before I even started college. And got my accounting degree, got my master's, got my CPA, went and worked in the big corporate world, and did that whole deal for a while, and then found my place in more serving small businesses because I like the impact. I didn't realize that the amazing positive impact that we can have on people's lives being an accountant. I mean, like, and it's something that I've kind of learned as we've built this business. And, I really feel like I've found my spot and where I want to be is helping small business owners, and not letting them get taken advantage of, because they don't teach you how to do a tax return. They don't teach you how to, they don't teach you accounting in grade school and in high school. And that's like a core foundation of like being successful at life is to understanding how to manage your finances. And so I think it's a good place to be and really be able to help people. So
Yeah, it's like you're a money therapist. It's like going to therapy, like, help me. I feel overwhelmed. You're like, actually, let's lay it all out. Everything's
Well,
good.
and I think this would be interesting for people. Like, I'm a CPA, but I have a CPA that does our taxes. Just because I would rather focus my time on supporting my clients and running the business and building a good place for our employees. And I want to have somebody looking over my shoulder to make sure that things are done right. So, like, you can never be too experienced or, to have some help. So
That's a great note. And so how did you vet your accountant?
I went to grad school with him.
Oh,
And so
nice.
I've known him for years and years. And so I mean it's like a personal relationship. And um so it's been pretty good, yeah.
I
But
love
I mean
that.
we could do so many more episodes on like questions to ask your CPA or questions to ask. And so let me know if that would be
Yeah,
valuable again
that
down the
would
road.
be great. Let's definitely plan that. Actually, we should plan that to go live in September, since now our new goal is to talk to our CPAs in September so we can figure out what our rest of the year we can plan for taxes. Oh, this is a question that came up for me, and I don't know if this is something that you would want to answer, but
Yep.
so taxes. We have an idea of what we're going to pay next year. Do you recommend putting the taxes, like that big chunk of money, into a CD account or some kind of a place where you can accrue interest that would be beneficial? So when you're going to pay your taxes, you have a little extra. What would you recommend? Is it just sitting in the bank safe enough? Like, yeah, tell me what your opinion is on that.
Well, in today's environment, a money market account, you can get 3.5 to 4.5% interest depending on what your bank is, how much money you have in there. And I like the money market account, especially when in small business. I like the money market account more than a CD because the money market account is very liquid, and like if you need access to that money, you can take it out. Whereas a CD, you put it in there and it's like, yeah, you can't touch it for 6 months. And the incremental interest on that is not worth it to me
Mm.
in a small business. So and again, like this would be if you're doing this is a best practice and you're killing it. But like if you're like each quarter or at some point in the year saying, hey, I have an idea of what taking a percentage of your income and putting it into a money market account that says I can't touch this. This is for taxes. Um, you know, that's a really good practice. And if you're doing that, you're way ahead of the game. So
So can you define money market? So a money market account is not the same as a CD.
right. So a money market account is a savings. I mean, it's basically a savings account, but the bank will offer you a higher rate of interest on
Yeah.
it than a regular savings. And the reason is because they typically put some stipulations in there where it's, you can only withdraw money 3 times a month or something like that. And so it's basically just a savings account on steroids with some other stipulations, but it's still very flexible, fluid, and like and liquid. Whereas a CD is a certificate of deposit. And what it means is I'm going to give the bank this money and I can't touch it for 6 months or 7 months or whatever the term is. And the reason they'll offer a higher rate on that is because because the way the bank makes money is they take people's deposits and then they lend it out at a higher rate than they pay interest, right? So
Mhm.
when they have a CD, they know it's like, hey, this person can't touch this money for 6 months. So we know that we have access to this money for 6 months, as opposed to a money market where it's like, hey, this person could, take all the money out tomorrow and we can't really plan for that. So
Interesting. Okay, it kind of sounds Ponzi scheme to me, the bank situation. I'm like,
yeah,
this
let's not
sounds
let's not
weird.
let's not dig any deeper into that
Yeah,
one.
okay. Yeah,
But
no.
that's our financial that's how America is built. Our financial services industry is based on arbitrage.
Yeah. And also our belief that money has value. That is all of
Yep,
our perception of it.
exactly.
That's fascinating. Okay, so I was totally, because I had talked to an accountant and it was very casual advice. And she mentioned like maybe a CD. And now it's interesting to hear you say a money market because the bank that I work or with, not the bank that I bank with, not
Yep.
sponsored, it's a credit union. And
Hmm.
I feel that their interest is higher than a certificate of deposit. I'm like, I mean, it seems like it would be better just chilling in that bank right now. So I feel like maybe even credit unions might offer higher rates than
They
traditional
might.
giant banks.
And there's so many variables. Like again, to go into this, but yeah, there might be a situation where your money market rate is higher than a 6-month CD. And that's because the money market rate is also going to ebb and flow with interest rates. So if interest rates go down, your money market account is going to go down. Whereas a CD, the bank is locked in. So the bank takes a little bit more risk with that as well. So in an environment where we're expecting interest rates to go down, a money market account might give you a higher yield today than what a CD will, because the bank's like, hey, interest rates are going to go down, X percent. So we don't want to guarantee that we're going to pay somebody 4.5% for 6 months if if rates are going to go down, for example.
Oh, so it could be 4.5 1 month and then not 4.5 the next month and just
Right.
go up
It
and
could
down.
be 3.5 the
Interesting.
next month.
And
But
so if you're going to do a CD, do those fluctuate? And it just depends on when you decide to get a CD, or is it always a flat rate interest?
the rates for CDs will, go up and down based on the market. But once you like sign your contract and like execute whatever, I'm not sure what the terminology is, but once you execute the CD and you give the money to their bank, that's a fixed rate. They can't change it.
Got it. And so are there other avenues to go? I know investment, that's a whole other episode. It's talking about investments. Is there
Yep.
any other way to invest your money to get interest that is not a bank account, that's not a CD? And I'm not even talking about real estate or, maybe playing the stock market, but is there other ways to invest your money?
Yeah, I mean, I think that the best investment that you can make is in yourself and in your business. And if you're debating on, putting money in the stock market and that's a risk, right? It could go up, it could go down. Or, hey, I'm going to take this $5,000 and I'm going to invest it into my business. I'm going to bet on myself, right? I think that's the best investment that you could make, is in yourself and giving you the opportunity to build your business and create more opportunity for you.
Oh my gosh, what a great way to end. I just got emotional. That is so real. I love this. Yes, invest in ourselves and believe that we're able to make a return on that, because we can. We are resilient. That is what the Partners of Commercial Fishermen community is all about. And I so appreciate your time to help us learn more and reflect back our value and how we can put that power back into our finances. So thank you so much, Chris Capone, our financial therapist. Definitely going to have you back, because I would love to talk more, if you're open to it, about
Absolutely.
CPA, all of those things, because yes, we want to make sure we're vetting the right people to make sure that we are protected and looked at and cared for, really, is what it all comes down to. So Thank you so much, Chris. We will see you again.
My pleasure. Take care, everybody.
Thank you so much for listening. To support our community, I'd so appreciate it if you'd tap the subscribe button to this podcast or write a review. And if you're a POCF who wants to connect further, go to POCFpride.com for weekly vlogs and to learn about opportunities to join our private communities. We'd love to have you.